This video will showcase one of the simplest and easiest ways to build out a systematic and disciplined approach for better investing and trading for your future. So let's dive in. What's going on, you guys? Welcome to the channel. My name's John. That's Groot. We trade options here. For anyone that's been out of the loop here, the market has recently had a 20 to 30% correction. Now, this does make sense as there's been inflation fears out there that we've printed so many trillions of dollars, and it just makes sense that there's got to be some inflation, meaning dollars may be worth less, or perhaps the Federal Reserve or other entities need to take action to control the inflation and inflation fears. Although this is a very rational fear and it does make sense, the real question is for savvy investors and traders to figure out what this means, decipher it, and determine if the narrative has changed. If this story has changed in the market, if there's a fundamental shift in the way that businesses operate, that's going to be really important. For example, Tesla saw a 30% correction. Now, did that mean that Tesla stopped making 30% of their cars, or their factories now started to have 30% less output overall? No. Because of a 30% correction, did Walmart all of a sudden have 30% less customers last week? No, that's definitely not the case. This means the narrative has not changed in a lot of quality companies as well as big growth companies. And whenever there's downturns in the market, perhaps by irrational fears, you'll see a big bounce back, and these are the first ones to bounce back. Whenever you see a downturn in the economy, maybe a fundamental shift in the way businesses are working, maybe the way that families are living their lives, well, growth and innovation is what's very important here because they're more efficient and they're able to gain and secure a bigger lead into the economy as the future of the economy grows. And realistically, this seems to be what we're seeing now, hence some of the gains you're seeing in the portfolio. So let's jump in and take a peek further. I'll explain the strategy as well as what we're looking at here. Okay, so we are back in the account here now, and you can see, pretty good day, managed to be up about 10% on the day, which is great. But keep in mind, flip side of the coin, it's not always a rosy, sunny day. So you always need to realize that when you're having a good time, things could turn real quick in the market. So for example, a week ago or a month ago, I was looking really great and expecting to go much higher, and we started to have a correction, but no fear. That's what discipline and kind of repositioning your account to where you think we're headed is going to be a smart way to approach this. So as I started seeing more losses, I got rid of my losers that weren't doing so well and started to position myself into bigger winners that I want to see outperform in the next 5 or 10 years. And mainly to keep it really, really simple for you, here's how I'll explain it. I'm very, very bullish in the long term over Tesla, Palantir, Nvidia, AMD, and genomics type of stocks. And then lastly, this is a little bit more medium term time frame, crypto type things, Ethereum, Bitcoin, and any companies that are related to that. I'm looking at about a 2 to 3 year basis on those types of stocks. Now keep in mind, this is not financial advice. Please don't blindly jump into something that I'm trading, because that could always flip on a dime. And I can't manage people's portfolios for them. I'm not a registered financial advisor or anything of that nature, but I want you to understand the mindset here and the approach. And so what I do though is those are my long-term plays. Now the bigger question is, how do you fund these? So as a broad-based overview, the idea of how to fund these is I actually will trade options for income, and that income comes usually on a weekly to monthly basis, and I'll siphon funds from that into my longer term plays so that it's more tax efficient. And then also over the long term, I should see more and more growth as I snowball these into the companies. And then the rest of that options income I use to basically grow the wealth snowball further and further. And I'll take a little bit of that out each week into more speculative plays such as GameStop or AMC. They're not really plays that I believe in, but if there's momentum or social momentum behind them, it's worth at least having a small amount of exposure, and I'm okay if that goes to zero. Now, to give you an idea, when we had the correction, I was able to pick up more shares. I grabbed a bunch of Palantir, which I'm very bullish on in the long term. So also in Tasty Works, you're going to see a couple themes here. Basically, what this is, if you're just trading on Robinhood, no fear. The concept is the exact same. I just have a couple different brokerages, and these are my personal accounts that I want to make sure you can have some transparency in and understand kind of my mindset here. So again, not financial advice, okay? But to give you some ideas in Tasty Works, having a good day, Riot, Mara, those are crypto related stocks. And in AMD, this is somewhat related. It's a technology company that's like Nvidia, but I bought leaps during the big downturn here, and I plan to hold these for a long time. So usually I was talking about weekly, monthly. Well, these are options I bought that don't expire for a long time from now, but it's much higher. It's at $150 is the strike price, and right now we're trading much lower at $81. So I bought these kind of on a discount with the market dropping, and that's why you're seeing some gains here. But that's a long-term play. I'm going to let that one ride out for a while. Riot is a Bitcoin related stock, and this is a little bit shorter term here where I did something called a call debit spread. And this is almost like as if you bought stock and said, hey, I want this stock to go above a certain price point. That's kind of what I did here, and we are now in the money on what I bought the calls in. So this is a good sign, and that's why you're seeing a positive gain here. But I want this to go well above $75 a share. So that's kind of the idea here. But I bought these during a correction, and I'm anticipating Bitcoin going higher with us printing more money. We just released the 1.9 trillion stimulus package, and so that's kind of something that we're starting to see here. We go to Mara. This is actually a little bit opposite. I'm doing a put credit spread, and I'll explain that at the end here along with what makes sense with a tie-up video to this. But essentially I'm saying, hey, I need this stock to stay above $40 a share, and I'm risk defining my trade at 24 with this put that I sold, but I'm net bullish on the stock. So I want this to stay above $40, and if it does, I'm going to collect $780 in income, and this is expiring in a week. So this is kind of what I'm watching as an income trade as well. And then I have a few others. You saw Tesla, bought this during the downturn. Similar idea, a debit spread. I need Tesla to stay above 695, and we are, and then the profits will come in each day, so I like that too. Palantir, same concept, except I bought this further out, hoping that we go over $30 a share by the middle of the year in June expiration. So these are some things to watch and keep an eye on. And then we'll talk about some other things back in the account. Okay, so as we're back in Robinhood, I just want to explain a little bit more on the income side of things. So we know the long-term play and how I approach that, but the easiest two things for income, keep it plain and simple, and this is something you can always do more research on, but I do this on the weekly, so feel free to always revisit and watch some videos related to that. It's going to be selling a covered call, and this is essentially having 100 shares of a stock, and you sell a call above where the stock is trading, and you collect income as long as you stay below that price level. Now, the next thing tied to that is a put credit spread. So what you're doing is it's just like that Mara trade I showed you, and you're collecting a credit for the amount of puts you're selling, and from there you're making a bet that we never go below your put strikes. So that is something that's really important too, but I'll show you an easy one, which is the covered call, and this is what I'm doing now. I opened up a position today, and so let's jump into Mara here. And I also have 300 shares in Mara on the Robinhood account, and this is a crypto type stock, as you're seeing. So Bitcoin did go higher, and in relation, here's Bitcoin. So we did go higher on Bitcoin. You'll see about 5% today. And naturally with that, you're going to see Mara go up too, which I imagine is about, even more. So 10% gain there. And what I did when I saw that is I did say to myself, okay, it is time to sell a covered call against at least 100 of my shares. I actually have 2 contracts out, and I'll explain that to you in a moment. But from here, I said, okay, let's trade Mara options, and that's going to be right here. And from there, this is where you look at options in a certain way. And I'm under call. I want to go to sell. And then I want to look at an expiration date that fits my profile. So March 19th is 8 days away. That's basically a week out until expiration. And you want to do a couple things. So the stock is trading at $42.51. And I went up here and I said, okay, where do I think the stock won't go to? But I'm okay if it gets to that point, and I will release my 100 shares. Otherwise, I'll collect income if we stay below the $50 strike. And so I picked the $50 strike for a few reasons. Number one, it's a little bit further away. Usually when you get to an even number, that does tend to be like a resistance level for most stocks and indexes. It's not always the case, but it's usually helpful to know. Number two, I collected about $300 roughly. This 281, I think it was like 290 or so. I had collected that because options are representative of 100 shares. So when you see a number like this, you multiply it by 100, and that'll actually get you the value of that contract. So I just hit plus and I'm selling this call. This does two things. This actually increases my break-even points to the number of credits that I have. So I have $281 in credit, or 281. So if you add 281 to this, my break-even strike is 50 plus 281, so it's $52.81, meaning that that is where I'm breaking even on this trade. Anywhere above it, I still am essentially going to make money, because what happens is, let's say Mara shoots up to like $60 a share. That's a pretty big gain for one, but for two is, since this stock is trading at 42.51, and if I'm saying 52.81 minus 42.51, that's a $10.30 gain times 100 shares. That is quite a bit. That would be $1,030 that I would pocket for giving up my shares. And that's pretty good. I'm willing to take that trade and the income. And the only downside I'm giving up is that I'm saying, okay, if we actually go, let me just hit contracts, boom, review order, and I'm agreeing to sell 100 shares of Mara at the $50 price. So think of it as like a limit order that I just set at $50 basically. And if and this is on or before a certain date. If I'm not asked to basically give up my shares, then I will keep all that collateral and the $281 of credit. So my 100 shares are collateral, and this would represent the income I could make. Or if really the stock shoots up and I give up my 100 shares, I still make the 1,030 for giving up my shares, on top of the likelihood of also pocketing the 281. So there's a lot to contend with here. But bottom line is, that's a really good strategy, because if I make $300, I now have money I can put towards my long-term trades, such as Tesla and Palantir, and then I can use the rest to build the income further. Or if it becomes $1,000 of pocketed money, I lose my 100 shares, but fine, I can start using that capital somewhere else. Either put it to work on another income trade, or put it towards Tesla and Mara again, or Palantir. So that's kind of the really, really most basic approach to this trade. And to give you an idea, that is not the covered call, it's the other one. It's called a credit spread. And this would be a put credit spread. And this is in Mara here. So the basic gist is my short strike, which is this selling of the 40 put. That is where I can't let the stock go below in order to pocket all of this premium, the $780 of credit that I've taken in. If it does, well, I'm risk defined. I won't lose my whole account or anything crazy, but I'm risk defined at the $24 strike. All right, so credit spreads are a really important aspect, also another component to income trading. So you're going to want to check out this video here, and it gives a really good explanation on how to set up a credit spread trade.